Welcome back, guys. In today's lesson, we are diving deep into the fascinating world of support and resistance. So, what exactly are support and resistance? Well, let's find out. Support is a crucial price level where a downtrend tends to pause due to a concentration of demand. Remember, in our previous lessons, we discussed different trends such as uptrends, downtrends, and sideways trends. These trends indicate whether the price is moving up, down, or sideways. In the context of support, imagine the price is on a downward trend. There comes a point where the price stops going down and bounces back up. That point is called support. It's like a safety net for the price, preventing it from falling further. Anywhere on the chart where there is a concentration of demand, you will find support. When there is demand, the price tends to rise. Support levels always make the price bounce. So as a trader, you want to buy at the support level. It's like finding a bargain because everyone wants to buy at that level, making it a buyer zone. Now let's take a look at a real example on the chart. Here we have the GBP USD pair, one of my favorites to trade. As you can see, the price is moving up and down, creating a sideways trend. However, there is a specific area on the chart where the price has never gone below. This area acts as strong support. Every time the price touches this support level, it bounces back up. This region is like a price floor. Whenever the price hits it, it resists going any lower and start moving upwards again. Buying at the support level allows you to enter the market at a cheaper rate because there is high demand and potential for an upward movement. Remember, support becomes more valid when the price bounces off it multiple times. So, keep a close eye on these levels and consider them in your trading strategies. Now, let's shift our focus to resistance, which is the direct opposite of support. While support levels push the price up, resistance levels prevent the price from rising further. Resistance occurs when there is an overwhelming level of supply, hindering upward price movement, just as we discussed the effect of supply and demand on price. When supply surpasses demand, the price tends to drop. Resistance is like a concentration of supply. It is considered a price level where the asset is deemed expensive or high. People are less likely to buy at resistance, leading to a lot of selling activity and a surplus of supply. Let's take another real example, this time with the Euro USD pair. Here, we can see an area that used to serve as strong resistance. Every time the price touched this area, it pushed back down. However, things can change in the market. Support can turn into resistance and vice versa. In this case, when the price broke below the support level, it started serving as resistance. Resistance resists the price, preventing it from moving above that level. On the other hand, support becomes resistance when the price breaks below it. It is crucial to recognize these shifts and adapt your trading strategies accordingly. Keep in mind that resistance levels can also turn into support levels when the price moves above them again. The key is to observe the market and identify these turning points. And there you have it, a comprehensive overview of support and resistance. Remember, support and resistance levels occur when the market stalls, reverses, and changes the price direction, leaving a peak or a trough on the chart. Support is where you want to be a buyer, as it indicates a potential price rise and acts as a price floor. Resistance, on the other hand, is where you want to consider selling, as it resists upward price movement due to a concentration of supply. I hope you have gained a deeper understanding of these crucial concepts in trading. If you find this video helpful, make sure to give it a thumbs up, share it with your trading buddies, and click that subscribe button below for more valuable content. Thank you for joining me in this lesson. Stay tuned for our next video where we'll dive even deeper into the world of trading. Until then, happy trading, and I will catch you up in the next one.